All right. What is going on, YouTube, Discord family? Welcome back to another edition of Top-Down Analysis. Hobbs. Uh, Ladies and gentlemen, thank you guys so much for an incredible week of trading, incredible week of growth, an incredible week of growth for the channel. I'd like to say thank you on behalf of myself and Jay Seals for helping us reach yet another milestone of 1,500 subs. For us, I know it doesn't sound like a lot to the people that have hundreds of thousands of subs, but I don't care what they're doing. I care about what we're doing, right? And for us, an organic growth of 1,500 subs in less than a year is perfect growth for us. And we wanted to say thank you for the 1,554, 56 people at this moment that have decided to come over to the Trader Shop and watch what we do. If you guys don't know, we trade live Monday through Friday, 5 days a week. 30 minutes before the market opens, we give out our pre-market plans, and then we trade live in front of an audience for about 3 hours. And then we also have the Discord and stuff like that you can join. If you have never been here before, this is the Trader Shop. We keep a barbershop feel. Please remember to tip your barbers, aka hit the like and subscribe button. Turn those notification bells on so you get notified every time we go live and or put out a video. If you are using prop firms, we do ask that you use the Apex code that you see scrolling across the screen. The stream doesn't cost you any extra money. It just gives us a kickback in order to help continue to support the channel so we can get new cameras, new audio equipment, all that stuff, or just, go out to the bar and splurge it all. Just kidding. All right. So now that I got all of that out of the way, let's jump right into the top-down analysis for this week. I always like to do kind of a little bit of a review from the last week before we jump into the monthly for ES and NQ. Last week, what we talked about is potentially there's two scenarios. We talked about the market going bearish, trading down, right, into a specific area that we defined. And then we talked about, which I was more inclined to believe that would happen, is we talked about the market going bullish from where we were, right, into all-time highs or close to all-time highs prior to NVIDIA's earnings, and then later using that area from Sunday as basically the new support, the new higher low, so to speak. And that's exactly what we got. I also talked about potentially seeing 19,126, but at the very least, we would see 19,000. We got exactly that, right? So another week in the books where the top-down analysis, again, not being a genius, not being some wizard, just following structure, right? Just reading the candle structures, understanding the way the market moves, and then putting together your hypothesis or your thesis based on the most probable position on both sides, whether it be bearish or bullish. We called the same thing on ES. It was the same area. It really looked nice and it worked out really well. And a lot of people were able to capitalize on that in the Discord this week. So that being said, let's jump right into the NASDAQ on the monthly and the ES on the monthly, and let's analyze candle structure, right? The candle structure is pretty simple. Whether this is your first time to the market or, you've been a veteran, a seasoned vet, it's clear to see that this was the best cup and handle of all time. I say it every video. It's just amazing how beautiful this cup and handle is played out. And it's the cup and handle that just keeps on giving, right? However, as we get closer to price, from the basing candle that we experienced on April 1st, now into May 1st, what do we see? We see another rally, right? A basing candle, right? And then a rally candle. So we anticipate more of the same, right? We get this rally here, we get the three-line strike, and then boom, push out off of the cup and handle, right? We get this rally candle here, we get the basing candle, and boom, another push out, right? There's no difference in what's happening right here. I'm not guaranteeing that we're going to continue to push. I'm telling you what the structure is giving you right now. What the structure is giving you right now is bullish structure. You can't deny it. Whether I believe in it, whether I think it's going to continue or not, it doesn't matter. I'm telling you what I see. This is a full body candle with 5 days left in the month, right? I don't expect for the market to give all of this back and put all of these people underwater without some detrimental fear being pushed into this market. Therefore, I can preemptively estimate that this month is probably going to finish green, right? We have Monday, we have no trading. Basically, the banks are closed. The trading market is going to be abbreviated. And then we go right into Tuesday and we finish this week on Friday. So we have PCE to end the week. I just don't see a reason for this market to just completely sell off, with NVIDIA reporting crazy numbers, beating all expectations, and then also offering a stock split 1 to 10. Just another thing I predicted last week. If you go back and watch the video, I said that they would do a stock split when they reach about 1,000 to 1,200. Right now, the estimated value is at around 1,100 for the end of the year target. I still think it's too low. I think it's going to be around 12 right before they split, but it's just my opinion. All right, if we go over here to ES, it's more of the same thing, right? We look at ES, we got the beautiful cup and handle once again, the best cup and handle of all time, right? The rally, the basing candle, and then just a slight trade above the previous all-time high, letting us know that buyers are very interested in continuing to push. Sellers had their opportunity down at the lows, they failed, right? And now they're starting to push back up into the following month, all right? We are getting to, I'll add this before I go down to the weekly. We are getting coming to the end of, or the start of the summer. Historically, the market starts to sell off coming into May, June, and July, and then ramps back up around October, November, December for the Santa Claus rally into the next year. So just be aware of that. Maybe come June or July, expect somewhat of a sell-off, as we enter into the next earnings season. NVIDIA kind of ensured, NVIDIA and all the other 6 Mag 7 stocks, they kind of ensured that we would make it through this next quarter. But if the Fed starts to cut rates heading into the summer, which the market is kind of pricing in, it could be a buy the rumor, sell the news event come July, where they've been buying the rate cut, right? And then when the rate cut comes, all of retail is going to be like, yeah, the market's going to go to the moon. It's like, nope, we already went to the moon. It's time to start selling, all right? So let's jump down to the weekly, and then we'll analyze the candlesticks and the structure on the weekly channel, right? Okay. So again, what did we have? We were putting in higher highs and higher lows. This beautiful trend is continuing, right? Nice little rally, push down, which everybody was so bearish on. And in the shop, we specifically said, hey, be careful being bearish down here, because we just pulled into the low that brought the high, and the market could look to push off from here. And then I said on ES was much stronger. So we pulled right into demand, right at the lows, and immediately found buyers. Again, ensuring the uptrend is going to continue. Well, what are we looking for from this low? We want this low to bring us a new high. Well, that's exactly what it did over here on on the NASDAQ. This low brought us a new high. Therefore, so far, the trend continues, right? We want to see some higher lows being put in. So maybe we get somewhat of a pullback. Just depends on how we end this next week. We could just continue higher before then pulling back into structure that most likely will be seen or heard on the daily chart. All right. Over on ES though, this again, we've been seeing this candle at the top of structure. I called it out over here Monday, May 13th, or the week of the 13th. I said, hey, this could continue. However, be aware that a doji candle at the top or bottoms of trends can be an indication for a reversal. You see how this doji candle indicated a reversal, but this doji candle indicated more aggressive push. It's just something to note. However, understanding that we're coming from bullish character, I will be very cautious to look for shorts until we break below this weekly wick, right? The doji candle is cool, that's fine. We can print a doji and continue higher, but I want to see what we do if we close beneath this 52.71. That would be very interesting in regards to the bearish case. All right. Before I start giving my predictions, however, I'm going to come down and look at the daily, and then we'll start to kind of break down what we're looking to trade on when we get down to about the 4 hour, right? This is just more so discussing the trend and how the candles are forming inside of the trend, right? So if we look at the daily, you can see for the last 3 weeks, the ES, the SPY, has been outperforming the NASDAQ, meaning it's been getting very much higher or, not dropping down as low as the NASDAQ. Well, this week, things have somewhat changed. Obviously, NVIDIA probably has something to do with that, where the NASDAQ and the ES are basically the same now. They're basically at the exact same level. One could argue that the NASDAQ went up slightly higher than the SPY, but at some point, the SPY basically caught back up with it. So now everything is aligned, which is how you want it to be. So there's a couple things you can note from the structure that we're seeing today, right? Or we're seeing going into tomorrow. First, you could note that we're coming from bullish character, which is fine, no big deal. However, one could argue that for now, we're putting in what we could argue is a rising wedge, right? But if we're looking back in history, that hasn't really worked out too well for the bulls. I mean, for the bears, right? Every time we put these rising wedges in, everybody starts to be like, yeah, when this wedge breaks, I mean, I surf social media or YouTube a lot, and I hear it everywhere. Oh, we got this rising wedge pattern, like we're gonna dump, and next thing you know, the market dumps down, everybody gets bearish, and then zoop. Listen, let me give you a word of advice if you're thinking like that. This market's not gonna sell off until they're ready to sell it off. There's nothing you with your prop firm account or with your small account or with what you think is a large account, right? Nothing you can do is going to stop this market from going the direction that it's going. So the one thing that you could do is just be quiet and trade the market, right? Trade what you see the market doing, not what you think the market is going to do. That would be my word of advice to you. That's what I'm going to try to do this week, because I too do not believe fundamentally we have any business being up here. But it doesn't matter what I think. What I can see though is higher lows, higher highs, higher lows, and higher highs being put into this market. And at the end of the day, that's the only way the market's going to continue to rally, is if it continues to put higher highs and higher lows. However, if we go over here to the SPY, we can see a slight difference between the two. Over on the NASDAQ, you see these lows at 689.50. Notice how we're holding the low on the NASDAQ. However, those same lows at 5305.50 on the ES have been broken through. But look what happened immediately when we got down to these lows. We closed the day before and we immediately started buying up. So the question is going to remain, what are we going to do at this level here? It's the same as it was, I think it was like a couple weeks ago when I said, hey, if we cannot get back and close back above 5321.50, the high right now is the all-time high. So everything below the all-time high is bearish. So Monday or Tuesday is going to be very telling for the NASDAQ, for the ES, if it can't trade back above 5321.50. If that can't happen, then that's going to put us into bearish character, and the market is going to try to take out 5274.75. And that's something that we're going to be watching really closely in the shop this week, is how the market reacts to this exact level, because that's where we ended on the bell, right? We ended like right at that level, and we traded up there for about 4 hours to close the day. Like we just kept trying to take it out, and we couldn't take it out. Doesn't mean that the buyers won't finish the job on Monday, but it's something to note, because in an extremely bullish market, you shouldn't always look to be bearish, but you should be aware of the opportunity to be bearish when it presents itself. And anytime we put in an ultimate high at a psychological level, especially on the NASDAQ, 19,000, anytime we put in a high like this, it's up to the buyers to decide if they want to continue to trade higher, because that's a psychological level. It could be somewhat of a roadblock, like, hey, we've gone too far. But for us on the NASDAQ, that level sits at 18,925.75, right? Anything below 19,022 should be considered to be bearish. However, on the 4 hour, as I live and breathe, right? As I said that, what do you see, right? You can look at this candle structure here. You can look at this candle structure here and be like, yeah, we're bearish. Yeah, you're not incorrect. We closed the low. But what we do at this low though, right? This was the low. This entire area was the area that I was talking about when I said, hey, we could potentially hold, right? We could potentially hold through all of this and then start to rally. ES did something a little different. ES consolidated, right, this entire time and then rallied up, and now it's sweeping back down. In Q, however, during that same time frame, right, came down. Hold on, let me make sure I'm in the right areas. This is the 24th. Okay, yeah, Sunday. Here we go. Yeah, so Sunday, NQ started to rally already up, but then when it came back down, notice how it came back into Monday's lows, right in this area right here. That's kind of important because, in the sense, on a smaller time frame, these two instruments are doing two different things, but they're both putting in a higher low, right? It's a different type of higher low because this is a change of character. This is more of a double bottom, right? This is also a double bottom, but it changed character up through here. It's just a little bit, the slight differences in the price action. So what am I looking for? Let's turn these levels on here and I'll give you guys a little bit clearer view of kind of how I'm looking at price going into the following week. So let's turn these on here. Back to normal. There we go. All right, so we'll start with the NASDAQ and then we'll work our way to ES. All right, so let's just blow this up here. So what am I looking for? There's a couple things that I would go back to the weekly and I would definitely mark this because this has been acting really good, which is 50% of this weekly candle right here, right? If we take 50% of this weekly candle, it puts us at roughly about 18,000, right? We'll go back down to the 4 hour, puts us at 18,822. It also, this gray area right here, no pun intended, is a 5-minute demand zone, which usually works really strong when it has a break of structure and aggressive buying coming from it. I took you down to the 5-minute. I would show you that this aggressive buying did happen. It did take out structure, and now we're retesting this level. This also tends to be the daily Fibonacci. This is daily Fib, 50% of the daily point at 18,841.25. Notice how the buyers are reacting to these two levels. You can see based off this wick, the buyers are very interested in this level. Could it be that they find value at the previous week's 50% price? Yeah, I think that that's reasonable to think, right? I think that that's a reasonable assumption that buyers are looking at the prices and saying, hey, on Monday, right, this was a cheap price by 50%. So let's start buying here. The question is, are they willing to buy here and buy above 19,022? That's going to be the telling thing. So the first level I would be looking for retracements would be the weekly Fib. The second level I'd be looking for retracements is the 1 hour demand zone at 18,787.50 through roughly about 18,732, which would happen to be the previous day's Friday's low of day. Now that's a long way down, right? And without any negative news catalyst, I think that it would be very weird if we came all the way back down here after buying this up, if we're not going to turn bearish, right? So I'm more inclined to believe that the weekly and the daily will act as strong support if we're to remain bullish. And if that's the case, then this rally candle on the 4 hour will start to trade higher. And the first target will be 19,022.50 to take out that area. From that area, I'd be looking for price to do another 3%, right? From this level, because last week we called for 3%. The market's been averaging about 3%, right? So if we come back all the way back up to about 3% on a non-news catalyst day, by the end of the week, we'll say it's a shortened week. So we'll do about 2.5%, right? It's a shortened week. So we'll do 2%, 2.5%, about 19.3, right? Is what we could see to the upside. If we take this same measurement, right? And we go, okay, well, we started here and the market moves about 2 to 3%, right? To end the week. Well, it's going to move one direction or the other, right? So back down to the opposite side, we could start breaking through structure, right? That's why I'm more inclined to believe that the market's going to continue to either be bullish and or consolidate at this level. Considering we don't have news, we could just bounce between these ranges, right? And just hold these ranges until we get more news catalysts that are coming on Friday, right? If the market starts to trade down 2%, 2 to 3%, we're going to change character and the market's going to turn bearish until we find support at one of these higher time frame levels. That's why if you're a bull, you don't want to see the market trade 2% down. So you're going to do everything to defend these levels, right? In order to push the market higher, right? Ultimately, we're in a bullish market. My money's going to be on the bulls until the market shows me something different, right? So those are my two levels that I'm looking for. That level sits down here, roughly about 18,646 through roughly about 18,559. I want to see the market continue to trade above this level. If this level breaks at 18,559, then I'm going to start changing my thesis and looking for retests to short the market back down further. At some point, we need to start trading above the all-time high, or my thesis is going to be we're going to stay between these ranges, right? We might stay between this level and this level, which I'm comfortable with because that's a nice, strong range, okay? So let's move over to ES, and then we can go ahead and wrap this thing up. All right, so blowing up ES here. I don't need this plan here, even though there will probably be something that we go with on Tuesday. But if we look at if we look at ES in comparison to the NASDAQ, you can see that aggressive selling, breaking through not one, but two structural lows. But again, finding strong buying, right, out of this level, right? This level is important. The market's showing you it's important. It's showing you that this was Monday's consolidation lows, right? And the market's reacting to this level. Again, the daily demand, and this is most likely weekly demand in this area as well, okay? So the question still remains on Sunday, right? On Tuesday, will the market be able to trade back above all-time highs? Because everything below 53.62.5, 53.68.25 is now bearish, okay? Is this a strong rally back up? Yeah. But if you're looking at it, we probably only rallied 50%, right, of this entire move down. That's normal for bearish activity, right? However, when we got up here and we tried to continue selling down, look at the wick, right? So the question is really going to be on what the market wants to do coming into Tuesday. I think this is going to be really telling how we open. What I would like to see as a bull-minded person myself, what I would like to see is the market maybe come down one more time, test about 50% of this wick right here. So maybe putting us at around 53.14, 53, what is this, 53.07 area, because this was very key structure. Remember, we consolidated this entire time in this area. So between 53.07 and roughly about 52.94, come back down and test this one more time, and then start to rally to slowly push above 53.68. And again, that same projection to the bearish side can work on ES just like it works on the NASDAQ, except you got to understand that on ES, we're only looking for about 2% because the average move is about 2.5% on ES. But we have a shortened week, so maybe we give it 2% is right there. So 5,400, 54.16. Again, in the beginning of the week on Sunday, it's a bold statement. By the end of the week, you're like, oh yeah, of course that's about where we went. You know what I mean? That's only 100. That's only 100 points on ES, right? If we go 2% the opposite direction, we start from the top of the candle down, right? Because that's where we finish at, well, the middle of the candle down. And we go 2% in the opposite direction. You'll see why I do not want us as a bull. I don't want us trading back into 52.13 because that would signify that the market is turning bearish. Okay, that would be our 2% move the opposite direction, right? So 52.0650, which would be an area that we can find buyers again if we start to trade back down. Therefore, in conclusion, if we're going to stay range bound, which is what most likely will happen on a shortened week, then I'm cool with us staying above 52.66 and basically all of this consolidation. I'm comfortable with the market staying above this consolidation and not going above this all-time high. If we stay in that range, I'm completely comfortable with that because that tells me that the market is accumulating at the high, right? On a higher time frame, accumulating at the high with intent to expand higher potentially, okay? I know most people will look at this, they will look at the market and say, no, we're too high. I want to be a bear up here. And that's your decision. What you need to understand is one more thing, right? That other thing is the volatility index, right? So I'm going to switch over here and I'm going to show you guys the volatility index. And I just want you to think about where we are in price and think about where the volatility index is in price in comparison to the two. All right. So let me just switch. There we go. All right. So zoom out to the weekly, the monthly, or whatever it is you want to do. on the volatility index. If you know about structure, you know about supply zones, you know how candles are formed, and ask yourself, what happened on the weekly on the volatility index every time we try to pump up, right? Let's scroll down and look on the weekly candles. Scroll down here. Every time the volatility index started to get aggressive, the market punished the volatility index. These green candles are representation of sellers, aggressive sellers. The black candles are an indication of aggressive buyers, okay? If the VIX is going down, the market's going up. If the VIX is going up, the market's coming down. So if you understand structure and you understand that this is a drop, a base to the downside, what do you think this candle is going to be, right? It's most likely going to move to try to take out these lows right here at 12.27. Therefore, if the VIX continues to stay below 14.26, right, and just kind of chills around 13.30, 13.20, or even better, starts to drop to 12, then I'm going to know the answer to my equation, right? If we start getting above 14, then I'm going to be more looking at the market like, oh, okay, maybe we are going to sell off a little bit. But if we just sit in between these two candles, right, this high, this low, then I'm also going to get what I want, which is range bound. So paying attention to the volatility index or looking at the stock market, the Mag 7, using those as somewhat indicators can absolutely give you an edge when you're trying to decide which way to take the market. It's what I use. You don't have to use it, but it's, it's a video. So I'm going to try to help you out as much as I can. We're all traders out here, right? At the end of the day, I wish you guys nothing but the best. And to all the veterans out there, including myself and Jay Seals, we'd like to say thank you for your service and have a happy Memorial Day. My name is T. Hobbs. This is The Trader Shop. We'll catch you guys on the next one. Peace.